Hi everyone, my name is Eric Sunheim. I'm a principal with Mercovis Valuations.
And I'm Abdul Markil. I'm also a principal at Mercovis Valuations.
So Abdul and I have been working together for a dozen years now, working on a number of valuations for the purpose of stock option issuance. And Abdul, what is the number one error we see our clients make when issuing stock options?
Granting options without a strike price.
Yes, so we'll constantly hear clients tell us, we've granted stock options, we just haven't set the strike price yet. And that's something that's not possible to do. It's like saying you just got married, you don't know to whom yet though. So let's dive into some of the definitions presented by the Financial Accounting Standards Board in the Accounting Standards Codification, and that'll help us understand the rules and regulations surrounding option issuance. So Abdul, what is a grant date?
A grant date is the date at which a grantor and a grantee come to a mutual understanding of the key terms and conditions of a shared base payment award.
Okay, so key terms and conditions, does that include an exercise price?
The exercise price is one of the most important key terms.
Okay, so if we haven't set the exercise price on a date, then we can't have granted on that date. Another term you might see is an award. So award means it's the collective noun for multiple instruments granted at the same time with the same terms and conditions to either an individual grantee or a group of grantees. And you'll see the FASB refer to awarding grants and granting awards. Basically, if there's no grant, there's no award. So the other term you might hear is issuing options. So what is an issuance?
An issuance is when an issuing entity receives agreed upon consideration. Now, grant of options subject to vesting is not considered an issuance.
Okay, so according to the FASB, if you grant options and they have vesting, that's not an issuance. So it's incorrect to say that you've issued stock options. Now, we hear attorneys all the time talk about issuing stock options. If you look on the SEC's website, that's something they refer to. So you can be forgiven for confusing these terms. One term you do not want to confuse them with, though, is the term promised, which doesn't mean anything from a tax or accounting perspective. So if you have promised somebody that you're going to give them a certain number of options, but you haven't set the strike price, then you haven't granted the options. And this isn't just semantics. It's a major problem for our clients. So what is the problem that they'll run into?
Let's say Jane was hired by ABC Company in January, and she was promised, 100,000 options.
Sure.
6 months go by, company has not granted the options, and the company has raised, say, a Series C round between that period, and now the value of common stock has tripled. So now Jane is going to end up getting options with an exercise price that is 3 times higher than what she would have received if she was granted those options in a timely manner when she was first hired. Now, you have to grant the options with an exercise price at or above the value of common stock. Otherwise, you run into U.S. tax implications.
Got it. So can't they just backdate the pricing to when Jane was hired?
Well, you can backdate the vesting, but you cannot backdate the price.
Okay, so Jane's not going to like that.
Not at all.
And there's a couple of different ways we can address this problem once it's arisen, but the cheapest and easiest way to handle it is to not have it come up in the first place. So how can we help clients avoid this problem?
Yeah, it's important to have a valid 409A in place. Our 409A reports are valid for 1 year. If you make an unexpected hire, but you have a valid 409A in place, then you're fine because you know what exercise price to use when you grant options to that employee.
Right, or if somebody exercises options, now you have a value in place that you can report to the IRS on Form 3921. So if you have any questions about granting options or valuation in general, please reach out to us. We'd be happy to see how we can help. Eric Sunheim, Mercovis Valuations.